Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and those 10-year note yields, highest since early July. Kickoff fourth quarter, moving higher amid some stronger data. We got the ISM data, comes in stronger. We got the prices paid component, comes in stronger. So there's inflation, there's growth. We had some numbers out of Asia that were also very positive. So things are moving up. And right now it looks like with yields creeping higher, the sense is that they're going to get to 240 before we get back to 225. Right now we're kind of near the middle. So I think right now leaning towards yields going higher, leaning towards maybe a little bit more bearish treasuries as data comes in more positive. And what has that done to our friends in volatility? Volatility showing some signs of life, something we haven't seen in quite a long time. We had moments of higher volatility around specific events over the last, say, 3 months. However, we're seeing a little bit of a base build in the 10-year December bucket and the 10-year March bucket at just below 4% in Dec and just above in March. And we're starting to see those hold and now actually creep higher. Now, why would volatility be going higher? Everything's doing what it's supposed to be doing, like positive data coming in and perhaps the Fed being excited, or perhaps investors looking for yields to go higher in the near term. But I think ultimately the higher volatility marks are now coming because of a few things. One, the Trump tax plan has yet to be confirmed. Two, I think that the longer term effects or greater macro effects of any hurricane damage has yet to be seen. And three, we still have a Fed chair announcement to be made. And while it is leaning towards a more hawkish nominee, which I think will be very welcomed by the market, it hasn't been done yet. So I think there's still some uncertainty out there. And when you look at what's going on the rest of the week, you got employment report that's going to be skewed a little bit by the weather and about with Mother Nature and the hurricanes and all that. So I think that right now the numbers are being kind of thrown out the window for just this week after today. And we're going to look more at those greater macro pictures. We want to see inflation. We want to see a tax reform plan. And we also want to see perhaps a nomination for Fed chair. So I think those are the things that the market is looking for, which is why we have the bid to volatility. The positive data is why we have the bid to yields. And I think that ultimately, what the Fed wants to do is raise rates at the end of the year. And right now that path looks pretty clear. It wasn't so clear not too long ago, but it is today. So right now, Treasuries trending price lower, yield higher as we head into employment. This has been Todd Colvin coming to you from the floor of the CME Group.